Good morning, it's Harvey Jackson. Just going to get through some news items. Venezuela seems to be the top news item right now. And the title of this is Canola would likely benefit from higher crude prices. But, when we look at what Venezuela is doing or what's happening there with the U.S. Basically blocking most of the ships and taking Maduro and got some pending charges and for drug trafficking. Looks like Maduro's opponent, Machado, vows to return and thanking Trump for capturing him. And you can see here that he's actually trying to line up some meetings with some of the top companies that could actually do some refining. And I've watched some articles basically talking about the movement of the heavy black crude that Venezuela primarily makes, and that's the same bitumen heavy black crude that Canada ships down there. So there's got to be a little bit of a pace that our stupid government is going to have to get in and do something, get some pipelines going so we're not so dependent on it. But it's just let's and with just securing that is not changing prices of the crude oil prices very much at all. Uh, Here's another interesting article I just found, just included in here. It looks like ADM, Bunge, Cargill, COFCO, Louis Dreyfus confirmed that they left the Amazon Conservation Pact, so the deforestation agreement that they were kind of behind is left. And I'm gonna say this, and probably more true than anything else. But the money, because there is no money in this whole green agenda that's going on, because the countries are basically getting closer and closer to going broke. Um, they're securing themselves because there's not free money to be taken there, so they're just getting the heck out. That's my opinion. Anyway, there's you can see that there's a little bit of a forward look. We get a lot of that at the beginning of January here. It looks like U.S. is increasing in its expected yields. Same thing with Germany and Japan. I don't think Canada could put themselves on that chart of increasing um, um, yields for their stock market. It's hard to say. I didn't include this yesterday, but I did want to point out how poor crush was last week. 17.6% from the week previous. Only crushed 205,000 tons, which is 75.8% of utilization. And on the right hand side here, I actually just talked about the exports, and we're always comparing to export pace to last year, which was, nine point some million metric tons. And we're maybe on pace to only get to six and a half if everything goes very well. But here's your wheat exports, and you can see that we're plus 1.4 million metric tons ahead of last year, and 1.87 million metric tons behind on the canola. So with other commodities getting maybe accelerated, like barley is accelerated and some of these other products, you can see that the gap is getting taken by the capacity that's lost in the canola. Uh, Jobs numbers is probably the biggest one that for the economic things that's going to happen this on Friday. Quick look at the weather. Here we are. Very little snowfall expected in Western Canada. Cold, but not extreme cold. We do see some cold weather there. Um, it does. The weather in South America does tend to be looking a bit drier in the next 2 week forecast. Canola had a good day yesterday. Up $1.90 right now. European rapeseed is up $1.25. Soybean oil is basically flat at 49.83. Palm oil just slightly down below the 4,000 ringgit. Crude oil up a $0.25 a barrel at 58.33. And U.S. Diesel is at $2.12 or 2.13. Soybeans flat. Wheat flat as well, and your corn is flat as well. Canadian dollar slightly down. So just quick look here. I put in some volume trend lines or volume support and resistance, and you can see that this area right here is, if we get to the bottom end of that area, which is, let's call it 620, I would expect it maybe go short again. That's what I'm looking at the moment. For the guys that didn't go long, would be looking at maybe adding some shorts there. if it makes sense. And again, every day that could change as well. Soybean oil futures basically going sideways, still not because it's been going sideways for quite some time here. Soybean themselves had a good day yesterday, a good positive day here today as well. We'll see how if it can break out of this low valuation. Do expect the USDA to have some influence on that next Monday. Crude palm oil futures basically chopping, making lower highs and lower lows at the moment in this trend. You got the crude oil futures still staying in that channel going down. It is getting closer to that extension. And your U.S. Harbor Freight diesel futures have been trading at this relatively low value. And if we look back, it has been a little bit lower, but these are still pretty good values. Quick look at the Canadian dollar. It's falling from its high point that it made at the very end of the year. And the U.S. dollar index does look like it might be trying to edge its way back towards that 90.5 kind of area, 98.5 area. Gold futures looks like it's going to try to break out here. Same thing with the silver. Quick look at wheat. Basically been chopping sideways. So this is Minneapolis. And just showing support and resistance with volume as well. And here's your French milling wheat, basically tracking sideways there as well. Same thing with your Kansas and your Chicago. So with some of these, and I think Darren Fesser is going to maybe mention this, but you could basically, if you don't think it's going to break out of this, we could actually sell puts and sell calls above the market if this market wants to continue to trade sideways. So if we look how long that market has been doing that, would have been an okay strategy to have implemented if we knew that it was just going to stay going sideways this long. But we could actually do that for going into March and lift the position if it were to set off.
On the day. Let's take a look here at that March corn. March corn had a really nice reversal candle yesterday, meaning we took out new lows, reversed higher, closed back above the 9 and 20 day EMAs. So that sets the price higher here towards that 450, 452, where we do have some levels of resistance here. So again, I do think that we can continue to push higher here, but between 450 and 460, I think this is a really good spot to reward the market, especially those of you that maybe have rebought corn. We've been saying for a little while now, hey, you get a pullback in corn, you buy for that reversal higher here. We did so. We bought at 438 here. We were working at 432 half. We canceled, replaced that to 438. We bought that at 438. We are looking to maybe exit that position on a move towards 452 in that vicinity here.
So you have a look at the corn futures. It's basically traded sideways for quite some time. Just quick look at the meats here. You can see that nice and green for the last few days here. And looks like it's going to continue potentially here because it's got to 61.8 and trading above it now. The lean hog futures haven't quite broken out of that same kind of a trend line. Next, you got the labor report, and then January 12th, we've got the WASDE report.